Hey, everybody, it's Jennifer. Welcome to step 2 to positive cash flow. It is Tuesday at noon. Wow, the week is already flying. I hope you're all doing well. We're going to wait a couple of seconds here for some people to hop on. If you are here with me, please say hello. You'll see in the notification of the live that if you in order for me to actually see who you are, at least while I'm on StreamYard, you'll have to give StreamYard permission to let me see your name. Otherwise, you can just type in the comments who you are and say hello. I really love to know who's here and that people are here, so I don't feel like I'm talking to an empty room. This whole Facebook Live thing is always a challenge. So I see we've got a couple of people on. So if you're here with me, please tell me you're here with me. Say hello. Let me know that you are that you're here with me. And I'm trying to see if I can actually see myself live. Not yet. I hope I'm live. I must be because I see some people are here. All right. So let's get this party started. Hello, thank you for joining me. Again, if you're here with me, please say hello and let me know who you are. Give StreamYard permission to let me see your name or just say hi. And then when I go back to watch the live on the pages, I will actually see who it is. Oh, wow. Yay, more people hopping on. So let me know you're here if you just hopped on. Yesterday, I talked about step 1 to finding the positive cash flow in your business. I talked about setting sales goals every day, every week, and every month in your business to help you visibly see where and how much traffic you need to drive to your business, to your Facebook page, to your website, whatever that might look like for you right now. And when you can visibly see what those sales goals are and have them down on paper day by day, it really gives you a better sense of what you have to do and how much work you have to do and how creative you've got to get to drive that traffic to your store. So we talked about that yesterday as being step 1 to finding positive cash flow in your business between now and the end of the year. Step 2 is a little bit of a different idea. When you talk to your accountant is going to, and you're looking at your financials, your accountant's going to say, well, here were your sales, and here was your cost of sales, and here was your gross profit. Well, as a retail consultant, as an inventory planner, and as a CPA, a former CPA, I look at things very differently for my clients, and I want you to learn to do this for yourself. We don't look at cost of goods sold. Cost of goods sold are important, of course, to a point, but they really don't tell you the true story, which is how much cash you actually are going to have at the end of any period to pay your bills. I mean, pay your rent, pay your people, pay your marketing costs, pay your credit card charges, all those things that you have to take money out of your pocket to pay. Really using cost of goods sold does not tell that story. Okay, why is that? So what is cost of goods sold? I guess it's important to understand. So if you sell $100, if you sell an item for $100, the cost of that item might be $50. So if you were looking at that transaction on your profit and loss statement, it would show sales of $100 and cost of goods sold of $50 and a gross profit of $50, right? But what if you were just selling this one item? What if you sold that item for $100 and that you paid $50 for? But what if you had 10 of them? What if you had gone out and purchased 10 of that one item? And we were looking at this right now at this period of time. It's a week They've been in your store for a week. You've sold one of those items for $100. Your cost of goods sold was 50. But your cost of purchases, because you bought 10 of them at $50, was actually $500, right? Because you bought 10 at 50. So you shelled out $500. So really, your true story right now at this period of time is that you had sales of $100, but you had cost of purchases of $500, meaning you were $400, $450 out of pocket. No, $400 out of pocket right now for this purchase and sale of this group of items. I hope that's making sense. So this is the same for any period of time. It could be for a day, a week, a month, a year. If you really want to find out what your true cash outlay is and how much money you truly have to use to pay your overhead, you need to look at sales minus cost of purchases. So, all long story to say that you need to learn how to identify your cost of purchases. So between now and the end of the year, you've set your sales goals that we talked about yesterday, and now you need to go out and try to identify your cost of purchases. And so at this point in time, I'd like you to identify everything that is going to be an outlay of cash for purchases right now. Hey guys, can you close that door, please? Sorry, working from home. Always interesting, right? So, so you need to figure out right now, you've got 6 weeks. So let's just say your sales goals for the next 20,000 or the next 6 weeks are $20,000. What is it going to cost you in merchandise purchases to pay for those merchandise purchases? So anything that you still owe and anything that you're still planning to bring in. And you need to identify what those are and subtract that from your sales. And that will give you a better sense of what your positive or negative cash flow is going to look like at the end of this 6-week period. So hopefully you've got your cash balance. Let's say it's $10,000. You take your sales minus your cost of purchases, and maybe there's another $10,000 there. And so now you know you're going to add $10,000 to your bank account. And at the end of the year, you're going to have $20,000 to pay all your overhead and all the bills that we always have to pay. So, moral to this story, you have to learn how to identify your cost of purchases. And instead of looking at your financial statements every week, every month, every year, however often you look at them, should be at least every month, you need to look at sales minus cost of purchases and forget about cost of goods sold. You can use cost of goods sold just to monitor your gross profit margin so that you know if you're marking things up enough and taking or not taking too many markdowns. You want to monitor that. But sales minus cost of purchases is what is really going to help you to understand and to identify whether or not your business is producing positive cash flow or negative cash flow. I have one quick story about this, and some of you have probably heard me say this before. I've talked about this before. I've talked about how we go to our accountant and they tell us, oh, well, you made a profit this year. And not only did you make a profit, but you have to pay taxes on that profit. And you're like, well, how could that be, right? Because I don't feel like I made a profit. I don't have any money in the bank. Well, the reason, the discrepancy there is this difference between using cost of goods sold versus cost of purchases. If you're just looking at cost of goods sold, which is what your accountant's going to do, you're not going to really see the whole picture. Your reality is not going to be the same. What you feel in your bank account is not going to be the same as what's on that piece of paper showing that you made a profit when you don't feel like you've made a profit, because you really haven't. You may have made a profit on paper, but you haven't made a true cash profit. So, step 2, identify your cash purchases. Take sales minus cash purchases between now and the end of the year, and you'll have a good understanding of what your gross profit is going to look like in order to cover your overhead and have a positive bottom line at the end of the year. Hope that makes sense. Feel free to reach out, message me if it doesn't make sense. It's easy to talk about, it's easier to see on paper. If you look for my email today, you'll see I did lay it out a little bit clearer so that you could see it better on paper. So, have a wonderful, wonderful rest of your day. Please join me again tomorrow and we will continue finding more cash in your business. Thank you and have a wonderful, wonderful day.